Yes, there is a marginal increase as far as their NPAs are concerned. Mayuresh Joshi of Angel Broking is now joining us. Mayuresh, good afternoon. What's your first take on HDFC Bank numbers?
Afternoon, Pankaj. More or less in line with estimates as far as most of the parameters are concerned. Loan growth, one obviously assumed deposit growth to be much higher. NIMs have obviously been very, very stable as well. And if the management commentary hereof states that the NIMs might stay in this range of 4.1 to 4.4, I think that will be taken positively by the street. Now, regarding provisions, I think that is the only blip that I probably see in the numbers. But as I'm seeing through the statements, they are having general provisions of 280 odd crores, which have come through as an increase onto their provisioning figure, and largely some other provisions which have taken place. So I think is that a proactive step is something that will need to hear from the management in terms of the RBI directive, in terms of providing more on even the standard restructured assets, as well as the additional provisioning required to be done. But more or less, I think stable set of numbers as far as asset quality is concerned, and even on the other parameters, including loan growth and deposit growth.
Right. After Yes Bank and IndusInd, a little bit of increase in that provisioning was expected?
Oh yes, as I mentioned. So the increase in provisioning was expected to come through. And my own sense is that they have proactively provided more because of the kind of growth that you've probably seen on the NII front. So they've got cushioning to be done, and they've probably done a lot of cushioning in this quarter. And that flexibility is something that the bank always has in terms of their core performance and the profitability that it generates, to provide more in terms of the counter-cyclical requirements, as well as the RBI directive which mandates them to provide more. So yes, I think the kind of provisioning that has come up for the bank, in my opinion, I think has been adequately done, considering all these factors that are supposed to be taken into cognizance.
Right. In terms of NIMs at 4.3, now 4.2 was the estimate number. But in Jan last year, that's in 2017 Jan, there were some steep cuts that were taken by all the banks across in terms of their loan amount, the base rate that they give loan at, and HDFC was also aggressive in that. Still the loans are maintained, or the NIMs are maintained. That's a positive sign?
Oh yes, absolutely. I mean, more or less expecting NIMs to be stable, but a 10 bps increase is a positive sign that the bank has exhibited. So one must really identify where that 10 bps improvement in the NIMs has come from. But largely, again, I think considering the pedigree of advances that the bank gives and the pedigree of the asset quality that it has been able to maintain, my own sense is that the management directive in terms of the band that they had given out the quarter back, I think they should be able to maintain that. But yes, I think it's a positive surprise in terms of the 10 bps uptick on the NIMs.
Right. Despite a 1,200 crore provisioning, the asset quality, the PAT number is in line or slightly higher. That itself should be taken positively?
Oh yes, that again is one angle which we should act positively in terms of how the numbers have panned out for the bank. Even with the excess provisioning, the PAT number is very close to what we had estimated. So yes, I think I've not seen the line-by-line item, but prima facie, I think it looks pretty impressive even after providing more on the balance sheet.
If advances growth is 19.4 and the total retail domestic loan portfolio growth is 23%, it's almost 3 times of the industry with this size. That also shows the power of this bank?
No, more or less, I think if you look at the quarter-on-quarter basis, I think the loan growth has been around 12.5–13%. So I think, yes, it's much better than what the industry is going through at this point of time, and this is more to do with the kind of mix that they've got. So the retail advances and the kind of advances that the bank probably has in terms of an end-to-end customer usage. My own sense is that they're able to maintain this loan growth going forward as well, and that will probably lead to sustainability in terms of a 20% earnings CAGR as well. So yes, I think quite confident that the bank should be able to maintain. Obviously, we'll hear more from the management in terms of their projections, but if they're able to maintain this trajectory going forward and improve thereof, I think an earnings growth of 20% is expected to be what the bank can deliver over the next few quarters as well.
Mayuresh, thank you so much for taking out time for us. Hope to see you again once you do a detailed analysis of HDFC Bank numbers. So Manvi, absolutely in line, a little bit of provisioning being higher, but PAT and NII and other details seem to be in line and point out towards a strong growth.